In the Swiss city of Basel, there's a strange circular skyscraper that looks like a fortress made of glass. It's home to an organization you've probably never heard of, but it has more global power than the World Bank and the International Monetary Fund combined. It's called the Bank for International Settlements, or BIS. It has total legal immunity. Its headquarters are considered inviolable territory. And its members, the governors of the world's central banks, meet in secret to set the rules for the entire global financial system. This isn't a conspiracy theory. This is the story of the most powerful, secretive, and important financial institution on Earth. This is the lore of money. We explore how money shapes history, power, and society. Subscribe for more. Before we tell the story of the Bank for International Settlements, you need to understand the world it was born into. The year is 1929. The First World War has been over for a decade, but its financial aftershocks are still tearing Europe apart. Germany is being crushed under the weight of impossible war reparations, fueling a hyperinflation that destroyed its middle class and gave rise to extremist politics. The global economy is a tangled mess of unpayable debts, with America demanding its war loans back from Britain and France, who in turn are trying to squeeze the money out of a bankrupt Germany. The whole system is a powder keg waiting for a spark, and the world's most powerful bankers know it. This is the context that matters, because it was in this chaos that they decided to build a new kind of institution, one that would operate above politics, beyond the law, and in the shadows. The story begins with a desperate attempt to solve an impossible problem. The Treaty of Versailles had forced Germany to pay for the entire cost of World War I, a sum so vast it was designed to keep the country financially crippled for generations. After an initial plan failed, a new one was drafted in 1929 called the Young Plan. It was led by an American industrialist named Owen Young. But the real power behind it was a small group of international bankers, including J. Pierpont Morgan Jr. and Hjalmar Schacht, the shrewd and powerful head of the German Central Bank. Their plan was to turn Germany's government debt into commercial bonds that could be sold to private investors. But to manage this complex operation, they needed a trustee, a new bank that would collect the German payments and distribute them to the creditor nations. This bank would be called the Bank for International Settlements. That was its official purpose. But the bankers who designed it had a much grander and more permanent vision. The reparations crisis was just the political excuse they needed to create the institution they had always wanted, a private independent club for central bankers, a place where the world's most powerful monetary technocrats could meet and coordinate policy, far from the prying eyes of politicians, the press, or the public. They chose Basel, Switzerland, as its headquarters for a reason. It was a neutral country, located at the crossroads of France, Germany, and Switzerland, making it the perfect discrete meeting point. And the legal structure they created for it was a work of genius. The BIS was set up as a private company under Swiss law, but its charter was an international treaty, granting it powers that no other institution on Earth possessed. The treaty stated, "The bank, its property and assets, shall be immune in time of peace and in time of war from any measure such as expropriation, seizure, or confiscation." Its headquarters were made inviolable. Its senior staff were given diplomatic immunity. It was exempt from all taxes. In essence, they created a sovereign financial state, a legally untouchable fortress for the high priests of money. The bank officially opened its doors in May 1930, but within a year, the Great Depression had made German reparations impossible to pay. The bank's primary official reason for existing vanished almost immediately. But that didn't matter because now the club had been built, and it was ready to pursue its true, unspoken purpose. As Europe descended into the Second World War, the Bank for International Settlements faced an existential crisis. Its boardroom was now populated by men whose countries were actively trying to destroy one another. The governors of the central banks of Nazi Germany, Fascist Italy, Britain, and France could no longer sit around the same table. In response, the bank's American president, Thomas McKittrick, who remained in Basel for the entire war, declared a policy of absolute neutral conduct. The bank, he promised, would not take sides. It would continue to provide its services to all its members, preserving the institution for a post-war world. This decision to place the continuity of finance above the morality of war would lead the BIS into the darkest chapter of its history. The board of the BIS included men like Hermann Schmitz, the CEO of IG Farben, the chemical company that manufactured Zyklon B for the gas chambers, and Walter Funk, who had replaced Hjalmar Schacht as the head of the Nazi Reichsbank. Funk's deputy, Emil Pohl, openly described the BIS as the Reichsbank's only real foreign branch. This was not just rhetoric. In March 1939, right after Germany invaded Czechoslovakia, the Nazis forced the Czech National Bank to send an order to the BIS. The order instructed the bank to transfer 23 tons of Czech gold, held in a BIS account at the Bank of England, to an account belonging to the German Reichsbank. Despite protests from Allied governments that the order was issued under duress and was therefore illegal theft, the BIS honored the transaction. The Bank of England, whose governor was also on the board of the BIS, facilitated the transfer, claiming it was merely following the instructions of its client. With a few pen strokes, the BIS handed the Nazi war machine a massive financial windfall, money that was immediately used to buy raw materials to build planes and tanks. This was not an isolated incident. Throughout the war, the BIS continued to do business with the Third Reich, accepting gold from the Reichsbank as payment on pre-war investments. Post-war investigations by the Allies revealed the horrific truth about this gold. It was looted from the central banks of occupied countries like Belgium and the Netherlands. It was also stolen from the victims of the Holocaust, melted down from dental fillings, wedding rings, and other personal possessions, and then recast into bars to disguise its origins. Records showed the BIS had received at least 3.7 tons of this laundered, looted gold, which it eventually returned after the war. The bank's wartime activities were so scandalous that at the 1944 Bretton Woods Conference, where the Allies designed the post-war financial system, the delegates voted to liquidate the BIS at the earliest possible moment. The Americans, in particular, saw it as a treasonous organization that had collaborated with the enemy. But the BIS survived its own death sentence. The central bankers of Europe, who valued their private club far more than the politicians did, quietly lobbied their governments. They argued that the BIS was an indispensable tool for cooperation, more efficient and discreet than the new, government-led institutions like the IMF. By 1948, the liquidation resolution was quietly forgotten. The bank was allowed to continue, its survival a testament to the power of the technocratic elite, who saw it not as a moral entity, but as a vital piece of financial machinery that had to be preserved at any cost. Having narrowly escaped abolition, the BIS reinvented itself in the post-war era. It became the quiet, indispensable architect of European financial cooperation. Its first major job was acting as the agent for the European Payments Union, a clever clearing system that helped war-torn European countries trade with each other again, paving the way for economic recovery. Later, during the Bretton Woods era of fixed exchange rates, the regular meetings in Basel became the secret command center for the world's most powerful central bankers. It was here they created the London Gold Pool in 1961, a cartel of central banks that secretly intervened in the gold market to keep the price fixed at $35 an ounce, protecting the US dollar at the heart of the system. But the bank's true ascent to supreme power began after the Bretton Woods system collapsed in the early 1970s. The world entered a new volatile era of floating currencies and massive cross-border money flows. The danger of this new world became terrifyingly clear in 1974 with the collapse of a German bank called Bankhaus Herstatt. The bank failed midday, after it had received payments from banks in New York, but before it had sent the corresponding US dollars back. The event, which created what is still known as Herstatt risk, sent shockwaves through the global system and revealed that there were no rules for supervising internationally active banks. In response, the central bank governors meeting at the BIS created a new body, the Basel Committee on Banking Supervision. This committee, housed at the BIS, would become the de facto global legislature for the entire banking industry. It operates through a unique system of soft law. The committee has no legal authority to make binding international treaties. Instead, it develops standards and best practices in secret meetings among senior banking supervisors. Then, the member countries commit to implementing these standards into their own national laws. While it's technically voluntary, the peer pressure is immense. The G20 leaders publicly endorse the standards, and the IMF checks for compliance. This process allows highly technical and controversial financial rules to become global law without ever going through a democratic vote or parliamentary debate. It is a system of governance by an unelected, unaccountable, and largely anonymous group of technocrats. And it has given the BIS more influence over the daily operations of global finance than any other organization on Earth. The most significant creation of this Basel process has been a trilogy of global banking regulations known as the Basel Accords. Each one was a response to a crisis, creating an ever more complex set of rules for the world's banks. The first, Basel I, was born in 1988 after the Latin American debt crisis. It was simple. It said that all international banks had to hold capital equal to at least 8% of their assets, with those assets weighted by risk. A government bond was considered risk-free, while a corporate loan was considered risky. For the first time, it created a level playing field for bank safety. But its simplicity was also its weakness. Financial innovation quickly made its broad categories obsolete. This led to Basel II, published in 2004. This accord was vastly more complex, built on three pillars: minimum capital requirements, supervisory review, and market discipline. Its biggest change was allowing large, sophisticated banks to use their own internal computer models to calculate how risky their assets were. The idea was to make the rules more risk-sensitive. The regulators trusted the banks to police themselves. This proved to be a catastrophic mistake. The 2008 global financial crisis was a brutal judgment on Basel II. The bank's internal models had massively underestimated the risks, especially in the U.S. housing market. Banks that were technically compliant with the rules were revealed to be holding far too little high-quality capital and not enough liquid assets to survive a panic. In the smoking ruins of the 2008 crisis, the Basel Committee went back to work, creating Basel III. This wasn't a replacement, but a massive strengthening of the old rules. First, it dramatically increased the quality and quantity of capital banks must hold, with a new focus on the very best kind of capital: common equity. Second, it introduced new capital buffers that banks have to build up in good times, so they can be used to absorb losses in bad times. Third, it created a simple non-risk-based leverage ratio as a backstop to prevent banks from becoming dangerously over-leveraged again. Finally, and most importantly, for the first time, it introduced global rules on liquidity. It forced banks to hold enough high-quality liquid assets, like government bonds, to survive a 30-day market panic on their own. This trilogy of accords, written in secret in Basel, dictates how much risk every major bank in the world can take, which directly impacts their willingness to lend money to businesses and individuals everywhere. While the BIS was busy rewriting the rules of banking, it was also playing a central, hidden role in another massive shift in the global monetary system. Since the 2008 financial crisis, and accelerating dramatically after Russia's foreign currency reserves were frozen in 2022, the world's central banks have been buying physical gold at a pace not seen in over 50 years. This is a historic pivot away from the US dollar and towards a tangible asset that carries no counterparty risk and cannot be frozen by sanctions. Countries are quietly moving their wealth out of financial assets controlled by other nations and into the timeless safety of physical gold held in their own vaults. And the BIS is at the very center of this shift. It acts as the discrete bank for central banks, offering trading, settlement, and safekeeping services for their gold reserves. It allows them to buy, sell, and swap huge quantities of gold with each other, away from the public eye. But its most important move was a seemingly technical change to its own rules. Under the new Basel III framework, physical gold, held by a bank on its own balance sheet, is now officially classified as a Tier 1 asset with a 0% risk weighting. Let that sink in. From a regulatory perspective, the central banker's own club has declared that physical gold is now officially as safe as cash or the highest-rated government bonds. It is considered a risk-free asset. This isn't a coincidence. This is a powerful feedback loop. As central banks, driven by geopolitical fears, repatriate their gold and buy more, the BIS has rewritten the global rulebook to officially validate their strategy. It is a quiet, technocratic monetary reset, sanctioning gold's return to the very center of the international financial system. The story of the Bank for International Settlements is a story of quiet, persistent, and unaccountable power. From its shady origins as a reparations agent that ended up laundering looted Nazi gold, it has evolved into the undisputed nerve center of global financial governance. Its immense influence comes from the very features that its critics decry. Its secrecy is defended as necessary for frank discussion. Its legal immunity is seen as essential for freeing central bankers from short-term political pressure. The lack of democratic accountability is not a flaw in its design. It is the most essential feature. The BIS was never meant to be accountable to the public. It was designed to be accountable only to its members, the global elite of central bankers. The Basel Accords, written in its secret committees, have more impact on your ability to get a loan than any law passed by your elected representatives. Its research shapes the future of money itself, including the development of central bank digital currencies. And its reclassification of gold as a risk-free asset has validated a historic shift away from a purely dollar-based system. The names change, the crises evolve, but the core mechanism of power at the BIS remains the same. A small group of unelected technocrats, meeting in secret, making rules for the entire world. If this opened your eyes to the hidden powers that shape our financial world, subscribe. Because the patterns that built institutions like the BIS are still running today, and I'll show you where to look.